What's up, guys? It's Migs with Market Open. I took two trades this morning, two very quick trades, and yeah, let's go ahead and do the market recap. Now, this morning we did not have a lot of gappers. There's nothing really that interested me. I do expect a bounce back on the bigger name stocks like Facebook, Nvidia, Baba, Twitter, and all that stuff. But I do expect the SPY to close the gap at first, so I took advantage of that. I have a couple of things to do today, so this is going to be the only two trades I take for the day and I'm basically done. So the first trade I took here was on Momo. It was gapping up this morning, and initially I thought the SPY was actually going to head up, but as you can tell, it actually ended up selling off. So I went long on Momo over, let's see here, over 28.65. Let me sort this for you guys. Actually, no, that's right. I went in over 28.50 with the stop right here at the 9. It was an initial pullback. It went up all the way to its highs, but then the market actually started turning around here on the fourth candle, as you can see, and Momo actually started going with it as well. So as soon as I went long, it failed. But since I did get it more near the bottom and I was able to actually risk less, I only lost $60 on that. My next trade was on VXX. Since I didn't have anything else that I really liked on my watch list this morning on the SPY, I knew that if it broke down below the lows that it was going to go and close the gap, basically. So as I watched it break down below VWAP and below the 9, I went long on VXX. I went long here over 49. So as you can see on here, it actually broke down the lows, so it's somewhere around here in this area where I took it short. And so it broke the low of day, meaning, okay, I think it's going to close the gap. And what I mean by closing the gap is here on the SPY, on Friday, it closed, the closing candle was here at 261.64. So what I expect it to do, there's certain reasons why this happens, but I'm not going to get into the details of it. But I usually expect the market to close the gap and then come back and kind of pick a direction. So I kind of covered this last time on how I tried the VXX, but I'm not really going to get into the details of why the SPY closes the gap. So what I did is I went long on the VXX. As you can see, the SPY went straight down. It almost closed the gap. And right down here is actually where I took my profits. I noticed that it actually started bouncing up a little bit. So I went ahead and took my trade off. I was already up more than I was risking. I was up a little bit more than 2 times what I was risking. And looks like I made the right decision. It's actually starting to bounce back up. But it actually might end up closing the gap later. I'm just not willing to go through that pullback right now. So I ended up taking $313.50 out of that trade. And I am done for the day. I took 200 shares long. And so definitely put something like VXX on your watch list if you expect the market to be volatile, because it is the complete opposite of what the market does. So if you expect the S&P to do a certain thing, then you can take the VXX a certain way. You can either go short or long, and it moves actually twice as fast as the SPY, so you can definitely make some good profits out of it. As always, if you guys have any questions, make sure to leave it down in the comment section below. Also, make sure to join our Facebook group. The link to that is also below. And I'll talk to you guys next time. Peace.